Guys, what is up? And okay, that sounded ridiculous. I forget that. I'm not going to do an intro like that again. I thought, we'll do a new intro video, new intro from Tans, but I'll be honest, that sounded stupid. So I'm not going to do that again. But I hope that everyone is keeping well, and I hope that you're all keeping safe. And welcome back to the channel. Welcome back to Vertex Investing. Now, before I get anywhere, I just want to say thank you to everyone who's liked and subscribed our videos, and also messaged us about how well you're getting on. And that's what the purpose of this video is actually going to be. So I received this message today. Messages like this, it really does mean a lot. I mean, what did they get? They caught, say, 1 to 11 on GBP USD, and I remember sending this one actually. Not sending this one. This is the one that I sort of showed in one of the breakdown videos. No, on one of I think the last YouTube video. And they marked AUD USD today, and they didn't get in the trade, but it's currently running at 1 to 14. Should I do a breakdown of this one now? Yeah, why not? I'll do a quick breakdown of this one to try and understand where they took it. So let's just go 4 hour. So AUD USD. Oh, they caught along in this. Interesting. Right. So in terms of AUD USD here, yes, we create a high from here. That's your range. It's not really broken the range, really sort of just running. It's running within that. Yes, the overall bias is bullish, and I can see the OB that they've gone off, which is here. Right, and remember to include the wick. It's quite an interesting way to look to enter. Yes, from this time frame, it's not exactly an OB because it didn't really break structure. Let's go to. Why don't I go 2 hour? Let's go 2 hour. Okay, yeah. In this situation, yes. Okay, so in this situation, yes, it created this low, high, low. Higher low, and then a breaker structure. Yeah, fair enough. That's a fair entry point there at that point. I'll be honest, the only thing that I would say about this pair, the only thing I'll say about this entry is the high time frame doesn't overly back it as such. For example, yes, you'll probably look for an entry. For example, we've got that range was created by the 4 hour, right? You're probably going to want to be looking for an entry from here. I guess that works. I guess that works. You can aim for the top of the range. Yeah, that's fine. I think I'm overthinking it, but I just think if you think about it in terms of structure point of view, I don't know what time frame you actually went off. To be fair, I didn't ask. I'll ask next time. But yeah, I mean, it didn't really break structure in the 4 hour for it to be an OB. So that's the only thing I'll be concerned about. But it depends on what time frame you went off. But regardless, it looks like you've entered somewhere later on. It looks like you entered. Right, okay. So you probably looked for a shift in structure on the lower time frame. I'm going to do a rough one. This video, the purpose of this video wasn't meant to do a breakdown anyway. But let's think what's happening. Create a low, low, high, low, break or structure, impulse. Yeah, break or structure. Create a new high. Got low, high. There we go. Is that a break? Yeah, breaker structure, entry, OB, up. Okay, yeah, that would have been a nice entry. Confirmation that price is going bullish. Fair play. It was just the higher time frame. All I would say is the higher time frame wasn't overly backing it in that situation. Let's go to daily. I didn't check that. Yeah, so. So the breaker structure that happened here, obviously it was from this OB. Yeah, I guess it's fine taking it along. It didn't really react. You can see that in this situation, price is struggling to break structure. It's struggling to push up. So if you think about momentum, in a momentum perspective, yes, it does have bullish momentum because it's taking a lot longer to go up than it is to come down. But it is struggling to push. So that's one thing I'm going to say. If we look at the weekly, I rarely trade this pair, so Nothing really there to react to. Let's go daily to the left. Okay, yes, that makes sense. So that's one thing to look, is obviously what it could potentially react to. Price is perfectly valid for it to react off this OB that's sitting there. So that's one thing I'm going to say. But obviously there's POIs that are sitting above as well that need to be mitigated. So yeah, that's one thing I'll say. But the point of this video is actually I received a message today. Okay, not that message. Yeah, so this is someone using our free strategy who shared a spreadsheet with me, and yes, they don't mind me confirmed. They don't mind me showing their name here, so it's all good.
Okay.
Yeah, so let me open this, and I wanted to show you guys that, you know, the power of the strategy. Now this is just using the free strategy. That's literally it, and this is only on one pair. And I didn't ask what I should have asked what pair it is. Did he write it anywhere? Nah, he hasn't. So this is from December to January, and obviously quite. What the heck is SNF? What is SNF? Oh, success. Oh, that's a new way of saying it. Success or failure. Right, fair enough. And this is just showing you the power of risk to reward. How many? What did he lose? So if you think about the win rate here, so December, he's gained 162 R, lost 2 trades, won 5, and in January the gain was 130 R, won 5 trades and lost 7. So he's obviously lost more than he won, clearly. But if you look at the win rate, yes, it's below 50%. But in this situation, with the way the strategy works, for him, for example, he's had say if he traded this live. Okay, say if he did. Say if he came out with 162 R from December, he needs to lose 162 trades to be back at break even. Just think about it that way. So even if the win rate wasn't great in January, it doesn't really matter. He still has to lose 162 trades to be back at break even from that point. But then no, he's gained another 130 R. So what's that? 292.86 R. That's some quick maths. So if you think about it from that perspective, like in terms of win rate, it doesn't overly matter if your wins are that high. Like look at the wins that he's had. I mean, he's had like, some crazy whoa, that was mad. Some crazy risk to reward trades. Right, and that's the main thing. That's the main thing you need to see is understanding. Oh wait, I don't know why I did the math so difficult because it's right there. But that's the main thing I want to show you is the fact that understanding that you will lose, okay, and you know you need to accept your losses. But like for me personally, and it sounds weird when I say it, I am very comfortable losing. I'm very comfortable taking a loss.
Ooh, you're hard showing off.
And the reason being is because I had a really good year last year. For me to be back at break even, I will need to lose a considerable amount of trades to be back at break even, which is why I trade pretty much fearlessly. Because, and I'm not trying to boost my ego or anything, but I'm trying to say is, you know, if you say, for example, I was him, and in December I caught 162 R, right? If that's the case, I would come into January without a care. Like if my rules are met, and that's why we trade using rules, is because, you know, for me, if the rules are met, I've got no reason to trade, and the rules are based off a statistical edge. So if you know that your rules provide a consistent edge, using the rules consistently should in theory give you consistent results. So that's essentially why I can trade without having to trade without emotions. Basically, you know, you take the money aspect out of it if you're thinking about the percentage. Because think about it this way, say, because I used to get very emotional. Say if I had like a really good week, and the next week I would lose like 2 or 3 trades, but I'm still sitting in the green. But those losses, not losers, those losses, actually I could have said losers, right? I think so. But those losses, you know, they would really affect me, right? But that's because I was attaching myself to the money, and it definitely is easier said than done. Like I fully understand that, because, you know, everyone used to say it to me, and I used to think, you know, it's easier to say in your position, and Yeah, it is easy for me to say, but if you have to think about it in that the whole, like, think about it across a bigger time frame. Don't think about the here and now. Think about, the long-term goals. So like for this, like 162R, right? I don't think I'll lose. Well, I don't know how many trades I'll lose, but say for example, over the course of the year, how many trades are realistically, depending on your risk appetite, how many trades are realistically are you gonna lose? Like, imagine losing 162 trades in a row. Like, it's just not going to happen. And if it does happen, then you've got something wrong with your edge. And what was interesting, and the main reason what spurred this video is because I had a DM yesterday actually on Instagram. And if you message with these conversations, I'm not going to entertain it anymore. It's just ridiculous. But someone tried our free strategy and said that it's not working for them. But the free strategy has only been out for God knows how long, not too long, about 2-3 weeks. So the question is, you most likely haven't given yourself enough time to understand the strategy. However, obviously they claim they understood it, but this is proof. I mean, obviously, like, this is someone's backtesting data, but this is like what you guys need to do to gain that confidence. I don't need to persuade you to tell you that this strategy works. You can tell from yourself by testing it. This is how you build your confidence, right? If you aren't backtesting, if you aren't building results like this, not even positive results, but if you aren't building a backtesting journal like this, you will really struggle to actually gain confidence in trading. If you ever go into a trade and you're starting to worry whether this trade is going to win or lose, you haven't done enough backtesting. You're not trading with confidence. Okay, like at this point where I am, I would take a trade if the rules are met. I will take it. I don't care whether it loses or wins, because overall I understand that I have that edge, and that's what this tells you. So this strategy, with the way that he's trading it here, right? He knows he's got an edge, right? He knows that. So he knows from here he can just take any trade, right? If the rules are there, he can just take it without having any doubts, because he knows in the long run he is going to be in the green. So that's essentially why backtesting is such a big thing, and building data like this. I think this is crazy. Like the fact that he's using the free strategy, and the fact that the last person, hold on a sec, the fact that the message I posted this morning, this one here, this is still from the free strategy. Like, these results are crazy. Like, these aren't the overall refinements that we teach at Vertex, but what we gave away is pretty much like, it's pretty much what you need in terms of smart money concepts. The only thing that we teach at Vertex is how to apply rules to it, and how to, like, we have a 2-rule process for our entry. That's literally it. And that's the main thing that's the main difference between Vertex and other smart money concepts groups, basically. But I just want to say, obviously, well done to everyone smashing it from the free strategy. I think it's crazy. But yeah, what I suggest is going away, building some data, probably like a few months worth, or however far back you can go. Generally on trading, you can go back about 2 months, I think, on the minute chart. Depends on whether you have TradingView Premium or not, or Pro. I'm not sure how many candles you get. It will tell you on TradingView somewhere. I need to get rid of these. It'll tell you on TradingView somewhere, but yeah, like building a journal like this, it'll help you, help you build your confidence when you do go to trade. Then what you'll do after here is start forward testing, or unless you're doing forward testing at this point, and then what I suggest doing is probably having a small live account, like even like £100 or £50, whatever you can afford. Just put a small amount in, so because you'll realize the psychology is different when you use a demo compared to a live account. But I just want to say thank you for sharing this with me this morning. I just thought I had to share it with the YouTube community, because this is crazy. And he answered the question that I had yesterday, last night on DMs. It just shows you that if you put the effort in, this is the type of results you can get, right? But I'm gonna start waffling now. I know this video is a little bit different one, but I'll be back with more I'll be back with more breakdowns. I've not been feeling too great, so I haven't been too active in terms of videos like for YouTube. But I'll be back. I'll be back short. I'll be back soon. I was about to say shortly. I won't be back shortly, but I'll be back soon with another video at some point. But I hope this video on backtesting has, has opened your eyes a little bit about what you can actually achieve, even if the win rate isn't too great. But yeah, I'll leave you guys now. If you like the videos, obviously like the video, or please make sure you subscribe. And also join our free Telegram channel. The link is actually below in the description somewhere. And I'll see you guys in the next one.